Thaddeus, let's kick off with a look at the currency. Steady appreciation we've seen in the Naira on the official and interbank market. That is something that's been around for some time now. The oil market has been buoyant. But how sustainable is this currency strength right now?
Yeah, we've seen a steady appreciation of the Naira at both segments of the foreign exchange market. At the WDAS yesterday, the central bank offered $150 million and sold $100 million that was demanded at the auction yesterday at a marginal rate of 155 Naira 60 kobo, 155 Naira 90 kobo, which represents 11 kobo appreciation from the last auction rate of 156 Naira 1 kobo. However, on the interbank market as well yesterday,
sorry, continue.
On the interbank market yesterday, I can hear you.
Yeah,
I can hear you. Okay, on the interbank market yesterday, the Naira opened at 157.65 and closed at about 157.50, which represents about 15 kobo appreciation at the interbank market yesterday. The steady appreciation of the Naira on both segments of the market is driven by basically low customer demand, which we've seen filter into the market, as well as improved dollar inflow into the market. We've seen multinational companies sell various volumes into the market this week, and this has helped to boost dollar liquidity for the Naira, and that has helped to strengthen the Naira in the short term. So our view on the Naira exchange rate in the near term is that we expect the Naira to continue to appreciate in the short term, given the expected dollar inflows into the market.
What about the gap between the rates that we're seeing in the official market and the interbank market? Do you expect those to continue to narrow? Do you expect those to continue to come closer together? Because that, of course, is a positive, and that, of course, is an indication of stability in the foreign exchange market.
Yeah, exactly. Given the trend we've seen since this year, we expect the band to narrow down. We expect the band to narrow down, so we expect the gap to be closer, the gap between the official window and the interbank market.
Let's look at the fixed income market in terms of the secondary trade on the bond market. It's been a relatively quiet week, but as we head into Q2, there are expectations that we could have new bond issuances. Has there been any clarity on that?
Yeah, on the bond market, we've seen some stability in the market this week relative to last week. And this is driven by, number one, the low money market liquidity. Secondly, the rising interbank rate. And thirdly, the auction calendar for bond issuance second quarter 2012, which market expects sometime this week. So the bond auction calendar for this quarter is expected to drive the market, given the fact that the auction of last week was strongly, the auction of last week was, we saw a huge demand on that auction as a result of the decision of MPC in March to maintain rates, which also impacted the demand and yield on the bond auction of last week. However, into this week and the weeks beyond, we expect the bond market to, we expect the auction calendar to provide the direction for the market in the coming weeks.
Nigeria has stated that it plans to raise around or issue around over 900 billion naira in bonds in Q2. Is this a sign of what type of uptake, rather, are we going to get from the market in terms of appetite for these bonds?
Yeah, that's for the Treasury bills market. The Treasury bills calendar has been published already. In that calendar, we expect about 917 billion of Treasury bonds to be issued in this quarter. When you compare to what is maturing this quarter, we have about 1.2 trillion maturing in this quarter. When you net off the volumes, you find out that about 300 billion worth of Treasury bills will be repaid into the system, and this is expected to boost system liquidity. And we believe that given the volumes that will be issued this quarter, we expect the yield on Treasury bills to continue to dip in the near term.
There has been a sense that foreigners have continued to buy up local bonds in Nigeria. The improving macro picture, as well as, of course, attractive interest rates are fueling this. Is this a likely trend that's going to continue for the rest of the month of April?
Yeah, we expect demand from foreign investors to continue to into the next quarter, because given the favorable macroeconomic environment which we've seen inflation decelerated in February to 11.9%, down from 12.6%, and we've seen improved macroeconomic fundamentals for the Nigerian economy. And again, we've also seen central bank maintain policy rates, and these have all impacted positively on the economy, which shows that the central bank is well coordinated in its monetary policy agenda.
There have been concerns around that oil price and the impact that it's going to have on inflation further down the line, but also, of course, it's a positive for the economy in terms of foreign exchange reserves. So there are those positive and negatives that you need to weigh up. But there are some that's saying that we could see a crash in that oil price, that it's run too hard, that it's pricing in a situation that is not going to pan out in Iran. Is that something that is a big risk factor from your side in terms of how it might weigh down on the currency and the country's fiscal position?
Well, looking at the global environment, oil price averaging about $120 per barrel in the last 3 months, and given the fact that the Nigerian economy is solely dependent on oil price, so I believe that if oil price goes down in the near term, the Nigerian economy, the currency will be under pressure. But again, I do not see oil prices going down in the near term, given the fact that there is a conflict between Iran and the Western countries. So we expect the dollar price to remain at $120 per barrel in the next 3 to 4 months. And of course, looking at the output for Nigeria, our output is at about 2.4 million barrels per day. We believe that this would help to strengthen the currency and also add to reserves.